Danielle, let's start with BP, the company formerly known as British Petroleum. What's the trade for BP?
So when you look at BP has been showing a lot of relative weakness here. So I don't like this stock. I think for now it's a hold, but if you break below 33.50, that for me would be a sell. If you look at earnings, they've missed earnings estimates the last 7 out of 12 quarters. So for me, I don't like that either. And then I also don't like the way that it gapped down 4.9% last quarter. So, I think it's okay to hold it, but if it breaks 33.50, it's a sell.
Okay, Danielle, and forgive me for this because we had just set it up talking about Darren Woods and ExxonMobil. Let's go to our side of the Atlantic. What's the trade on ExxonMobil?
So I like ExxonMobil, and I'm invested in XLE, and I am invested in ExxonMobil. I think that this is one of the shining stars within this space. It has been a little bit weak. We've seen a little bit of relative weakness this year, but if it can break out up above 105, I think that would be a great spot to add more shares. That being said, if we continue to get this weakness and it breaks down below 95, I would change my analysis, but this is one of the leaders in this space.
Okay, so there's the big oil trade. Next up, we're going to put a bail up there. It's Etsy in your mind. This was, by the way, the mystery chart that we showed you just before the commercial break. Shares are losing about half their value over the past year, but they popped yesterday after Etsy announced a partner from Elliott Management would join its board of directors. Elliott has said it's built a sizable stake in Etsy and will work to improve customer experience and long-term value for shareholders. BTIG is saying that Etsy could benefit from a fresh pair of eyes on the company. But Danielle, you are skeptical.
I am skeptical, and I think that this is a better one to short into strength. So it has quite a bit of overhead resistance between the $75 and $90 price point. Typically, stocks like this that are in a longer-term downtrend and they pop on news, especially before an earnings report. If you look at the way that it's behaved the last 3 quarters post-earnings, we've been seeing this stock fall. And so when you have a trend like that and then you have a stock that's gapping up before earnings, it can oftentimes be a spot for investors to get out. They're in a losing position. And so for me, I think this one's a short between 75 and 90. Obviously, 75 would be the more aggressive level. And then I'd short it down to 65, strong above $90 a share.
All right, Danielle, that's the trade on Etsy in your opinion there. The last one that we have is the bail that you have on Wendy's, which is down 15% in the last year. Activist investor Blackwell's reportedly planning a challenge to Nelson Peltz and the Wendy's board of directors, on which 3 Trian representatives with Peltz's side sit. But Gordon Haskett is calling it a publicity stunt as Blackwell's looks to push back on Trian's activism on Disney shares. There's so many different activist cross-currents here. Why are you bailing on Wendy's?
So when you look at Wendy's, you can see that it's gapped up the last few quarters after earnings. However, those gaps have immediately sold off. Right there, you can see that you have investors taking profits any chance you get on an upward move. You also have the fact that it's underneath critical resistance. It's in a short-term downtrend. Again, when you have a stock that's coming up on an earnings report and you've had these negative reactions to earnings in the past, that's typically an opportunity for investors to get out before the report. So I think this one is a short here. I trade it down to about 17.50. I'd say, I'm wrong above about 21, 22.
All right, Danielle, we've got just a few moments left here. Speaking of Disney, that's a buy for you today. Shares are down 15% for the year. The company setting an April 3rd date for the shareholder meeting where Nelson Peltz and Trian, as well as Blackwell's, will try to get their board nominees appointed. What makes you a buyer of Disney?
I think Disney's finally turned around. Disney was a sell for me for quite a while, but the last 2 quarters after earnings, we've seen some gaps higher. We're just seeing a positive trend emerging from the lows in Disney. So with this one, it has already rallied, so I don't like it for a buy right here. I'd prefer to buy it a couple dollars lower, but I think that traders can trade it up into about the $100 a share price point.